Today, we're stepping into one of the most difficult, slow-burn, but potentially transformative corners of the technology market. This is not a company driven by headlines, hype cycles, or quarterly momentum. This is a company attempting to solve a problem that has quietly constrained computing for decades. Today, we're looking at 4DS Memory Ltd, trading on the Australian Securities Exchange under the ticker 4DS. At its core, 4DS is a semiconductor memory company. But that description barely scratches the surface. What the company is actually trying to do is far more ambitious. It is attempting to create a new class of non-volatile memory that could sit in the long-sought gap between DRAM and flash. Fast like working memory, persistent like storage, scalable enough to matter, and crucially, manufacturable inside existing semiconductor fabs. That last point is what separates serious memory contenders from science projects. 4DS's technology, known as Interface Switching ReRAM, or ISRAM, is designed to overcome some of the fundamental weaknesses that have plagued earlier resistive memory approaches. Instead of relying on unstable conductive filaments, the company is pursuing a more controlled switching mechanism at material interfaces. In theory, this offers better endurance, lower variability, and a clearer path to scaling at advanced nodes. This matters because memory is no longer a supporting actor in computing. It is the bottleneck. In AI accelerators, edge devices, space systems, and defense electronics, moving data costs more power and time than processing it. Whoever fixes that imbalance doesn't just improve performance, they reshape system design. 4DS has spent years working with global foundries, pushing this technology out of the lab and into real silicon. That process is slow, expensive, and unforgiving, but it is the only path that counts. There are no shortcuts in memory. This is not a revenue story yet. It is not a valuation story in the traditional sense. It is a technology validation story. And those stories tend to be uncomfortable to hold, quiet for long stretches, and explosive when they finally resolve. That is why 4DS fits squarely into the kind of companies we track here at TechEyeSpy. Not because success is guaranteed, but because the upside, if the physics and manufacturing align, is asymmetric. As always, if you want deeper context around how breakthrough technologies move from theory to capital markets, that thinking is laid out across the TechEyeSpy books, published by Rhubarb Bridge Publishing and available on Amazon and all good bookshops. With that foundation set, let's move into the strengths and why 4DS continues to attract attention despite the long road ahead. Strengths. The central strength of 4DS memory lies in the nature of the problem it has chosen to solve and the discipline with which it has approached that problem. Memory is not an incremental market. It is a winner takes most domain dominated by a handful of global giants, and yet those giants are constrained by physics, cost curves, and legacy architectures. 4DS is not trying to outmanufacture Samsung or Micron. It is trying to change the rules of what a memory cell can be. Interface Switching ReRAM, or ISRAM, is the core asset here. Unlike many resistive memory approaches that rely on the formation and rupture of conductive filaments, which can be unpredictable and degrade over time, ISRAM is based on controlled switching at material interfaces. That distinction matters. It directly addresses some of the biggest technical barriers that have held alternative memories back, namely endurance, consistency, and scalability. Another key strength is manufacturability. 4DS has not built a business plan around exotic materials or bespoke fabs. The technology is designed to be compatible with existing CMOS processes, which dramatically lowers the barrier to adoption. In semiconductors, compatibility is often more valuable than elegance. A memory that can be dropped into a known process node has a far higher chance of commercial relevance than one that requires reinvention of the supply chain. This is where the long-standing relationship with global foundries becomes strategically important. Working with a major foundry forces discipline. Designs must survive real process variation, real yield challenges, and real integration constraints. The fact that ISRAM has been fabricated and tested in a commercial foundry environment gives 4DS credibility that many early-stage memory companies never achieve. The business model is another quiet strength. 4DS is structured around IP licensing, not mass manufacturing. That keeps capital requirements relatively low compared to building and running fabs, and it aligns with how advanced memory technologies are often monetized. If successful, ISRAM does not need to win the entire memory market to be valuable. It needs to be good enough in the right niches for the right partners. There is also strategic alignment with long-term demand trends. AI, edge computing, autonomous systems, aerospace, and defense all prioritize low power, persistence, and reliability over raw density. These are precisely the environments where a new class of non-volatile memory could be adopted first. In those markets, performance per watt and resilience matter more than cost per bit. Finally, there is asymmetry. 4DS is not priced as if success is inevitable, and that is the point. The upside is tied to technical validation rather than incremental sales growth. If ISRAM proves scalable and reliable at advanced nodes, the value creation is non-linear. Partnerships, licensing deals, or acquisition interest can arrive quickly once confidence is established. In short, the strengths of 4DS are not found in revenue charts or balance sheets. They are embedded in the physics, the manufacturing strategy, and the discipline of aiming for a problem that, if solved, does not need persuasion to find a market. With those strengths in mind, the next question becomes unavoidable. What could stop this from working? Weaknesses? The weaknesses of 4DS memory are not unusual for a company operating at this depth of the technology stack, but they are serious, structural, and impossible to ignore. The most obvious weakness is that this remains a pre-revenue story. There is no commercial product, no recurring income, and no customer base generating cash flow. Everything hinges on future technical validation and partner adoption. Until that happens, the company exists in a state of suspended expectation, where progress is measured in milestones rather than money. That creates a second weakness: time. Semiconductor memory development moves at a glacial pace compared to software or consumer technology. Each fabrication run takes months. Each design iteration introduces new variables. Delays are not a sign of failure, but they are dangerous in a market where investor patience is finite. Being right eventually is not enough if the capital runs out first. Funding risk is therefore central. 4DS must continue to finance R&D, foundry runs, and specialist engineering talent without the buffer of operating revenue. That exposes shareholders to dilution, particularly during periods of weak market sentiment or when broader risk appetite for speculative technology declines. Even good news can come paired with capital raises. There is also concentration risk. The company's value is overwhelmingly tied to a single core technology. there is no diversified product portfolio to fall back on if ISRAM fails to meet key performance targets. This is a binary profile. Either the technology crosses the commercial threshold, or the equity story deteriorates rapidly. Another weakness lies in external dependency. Progress depends not only on internal execution, but on foundry schedules, partner priorities, and broader semiconductor cycle dynamics. A change in strategy at a manufacturing partner, or a shift in focus toward alternative memory approaches, could slow or derail momentum without any technical fault on 4DS's part. Communication is also a challenge inherent to deep tech. Progress updates are often highly technical, incremental, and difficult for the market to interpret. This can lead to periods where the share price drifts or overreacts, detached from the underlying science. That volatility is not just uncomfortable, it can affect funding options and investor confidence at critical moments. Finally, there is the risk of narrow initial markets. Even if ISRAM works, early adoption is likely to occur in specialized niches rather than mass consumer devices. That is normal for new memory technologies, but it means commercial impact may arrive slowly and unevenly, testing patience once again. Taken together, these weaknesses do not imply poor execution or flawed intent. They reflect the reality of attempting to introduce a new memory architecture into one of the most conservative and capital-intensive industries in the world. The key question is whether these weaknesses are survivable long enough for the technology to prove itself. That brings us to the opportunities and why the effort persists despite the risks. Opportunities. The opportunities for 4DS memory only become clear once you step back from individual products and look at how computing itself is changing. For decades, system design has been constrained by a rigid hierarchy. Fast, volatile memory at the top, slow, persistent storage at the bottom, and an ever-growing energy and latency penalty for moving data between them. That model is breaking under the weight of AI workloads, edge computing, and autonomous systems. The opportunity for 4DS exists precisely in that fracture. If ISRAM delivers on its promise, the most immediate opportunity lies in embedded memory. Rather than competing head-on with commodity DRAM or NAND, ISRAM could be integrated directly into logic chips as non-volatile working memory. This is particularly attractive for AI accelerators, sensors, and control systems, where instant-on capability and low power consumption are critical. Another opportunity sits in edge and extreme environments. Space, defense, industrial automation, and remote infrastructure all value reliability over density. These systems often operate in radiation-prone, power-constrained, or thermally challenging conditions. A robust, non-volatile memory that reduces system complexity and power draw would be strategically valuable in these sectors, where qualification cycles are long but margins are high. There is also a meaningful opportunity in licensing and partnerships. 4DS does not need to become a household name to succeed. If ISRAM reaches a point where it can be offered as a licensable IP block within established foundry ecosystems, the company could scale through other people's fabs. One major licensing deal can validate years of work and fundamentally change the company's trajectory. Acquisition remains a realistic, if uncertain, outcome. Large semiconductor companies have a long history of acquiring memory technologies once technical risk has been reduced. They prefer to buy de-risked innovation rather than invent it from scratch. For 4DS, success does not require domination of the market. It requires being strategically valuable to the right buyer at the right moment. There is also a timing opportunity tied to AI's system architecture. As AI models push closer to the edge and inference becomes more distributed, memory characteristics become as important as compute throughput. Any technology that reduces energy consumption per inference or simplifies memory hierarchies gains relevance across multiple hardware platforms. Finally, there is optionality. Success in one niche opens doors to others. Embedded AI today can lead to automotive tomorrow, then industrial systems, then specialized consumer devices. Memory technologies rarely arrive everywhere at once. They spread slowly, then suddenly. These opportunities are not guaranteed. They are conditional on technical validation and patient execution. But they are real, structural, and growing alongside the very trends reshaping modern computing. With that in mind, the final question is what could derail those opportunities entirely? That brings us to the threats. Threats? The threats facing 4DS memory are not abstract. They are active, well-funded, and deeply embedded in the structure of the semiconductor industry. The most significant threat is competition from incumbents. The dominant memory players are not standing still. DRAM continues to evolve through stacking, process refinement, and architectural tricks. NAND keeps extending its life through layer counts and controller innovation. Even if these technologies are imperfect, incremental improvement can be enough to delay the need for something new. In memory, being good enough often beats being better. Alongside incumbents are competing emerging memories. MRAM, PCM, FIRAM, and alternative ReRAM approaches are all chasing overlapping use cases. Some already have commercial footholds, particularly in embedded and specialized applications. Even if ISRAM is technically superior in certain dimensions, it still must displace solutions that are already qualified, trusted, and supported by large ecosystems. Another threat is internal substitution within major semiconductor firms. Large players often prefer to develop proprietary solutions rather than license external IP, especially when the strategic value is high. If similar interface switching concepts are developed in-house by a major foundry or memory manufacturer, 4DS could find itself competing with the very partners it hopes to attract. Timing is also a critical threat. Semiconductor roadmaps are unforgiving. If ISRAM matures just as system designers commit to alternative architectures, adoption windows can close quickly. Being early is expensive. Being late is fatal. The margin for error is narrow. There is also the threat of technical ceilings. Memory development is full of technologies that look promising until they encountered a scaling wall, reliability issue, or cost barrier that could not be economically overcome. Even small weaknesses, when multiplied across billions of cells, can invalidate an otherwise elegant solution. Market sentiment cannot be ignored either. As a speculative, pre-revenue technology company, 4DS is exposed to shifts in risk appetite. Broader downturns in capital markets or cooling enthusiasm for deep tech can make funding more expensive or unavailable, regardless of technical progress. Finally, there is the existential threat of silence. In memory, no news is often interpreted as bad news. Long gaps between updates can erode confidence, invite speculation, and increase volatility. That can become self-reinforcing, making strategic partnerships harder to secure precisely when they are most needed. None of these threats imply inevitability. They define the terrain. 4DS is navigating one of the most competitive, conservative, and capital-intensive landscapes in technology. Which brings us to the conclusion. and whether the risk is justified by the potential reward. 4DS Memory is not a company you follow for comfort. It is a company you follow for conviction. This is a business built around a single difficult idea: that the future of computing will not be unlocked by faster processors alone, but by rethinking how and where data is stored, moved, and preserved. In that context, memory stops being a component and starts becoming a system-level enabler. The appeal of 4DS lies in its restraint. It has not chased consumer hype, nor promised timelines that defy physics. Instead, it has taken the slow, uncomfortable route through fabrication, validation, and partnership with established players. That path is invisible most of the time, and unforgiving when progress stalls, but it is the only one that leads to real adoption. For investors and observers, this is not a question of quarterly performance. It is a question of whether interface switching ReRAM can cross the final boundary between promising material science and manufacturable, reliable silicon. If it does, the company's scale and valuation will change quickly. If it does not, the downside is equally clear. That binary nature makes 4DS unsuitable for many portfolios, and that is fine. Not every technology bet needs to be owned. Some are worth understanding simply because they reveal where the pressure points in the industry truly are. 4DS sits at one of those pressure points, between AI ambition and energy limits, between edge autonomy and memory persistence, between what today's architectures can tolerate and what tomorrow's systems will demand. For TechEyeSpy, this is a company to watch, revisit, and measure not by noise, but by evidence. When milestones land, they matter. When they do not, patience is tested. As always, deeper context on how frontier technologies like this intersect with capital markets can be found across the TechEyeSpy books, published by Rhubarb Bridge Publishing and available on Amazon and all good bookshops. Thanks for listening.